fair value gaps are powerful, order blocks are powerful, Malaysian support and resistance are powerful. But today I want to show you my simple fair value gap trading secret. Pay attention. Now you can use this to trade Malaysian support and resistance and otherwise. Now this is very important. Why do we call a fair value gap fair value gap? For example, take for example this candle. All right, so we have this as candle 1, candle 2 and candle 3. These 3 candles comprises of what we call fair value gap. However, not these 3 candles are fair value gap, but we have this one, the second candle becomes fair value gap. Now why is this called a fair value gap? Take note, before we move on, there are just 2 things that price does. Price will either seek liquidity or fill fair value gap. Now let me show you what I mean. Now when I say fill fair value gap, I mean price want to provide fair value. So for example, this is a swing point, right? We have a swing point here, we have a swing point here. All right, we have a swing point here because this was the structure of this leg, right? Like this. Now pay attention. Once we have been able to identify our swing point, for example, we have this swing point. What happened? This candle sought liquidity. So now that this candle have sought liquidity, 2 things we're expecting. We're expecting that it continues to seek out more liquidity or provide fair value. Now in order for it to provide fair value, what do we mean? If this candle is going up, you can agree with me that we have buying participants on this particular push to the upside, right? Now we don't need just buyers to fill the market. We also need sellers, because there's no market if there are no buying and selling. So if there's no buying and selling, so when buyers and sellers get involved in the market, this is where we now have market condition. All right, and otherwise you see the chart just moving like this, but obviously we do not see it this way, but rather it moves in a zigzag manner, up higher highs, higher lows, and so on, right? The reason is because when price seeks liquidity, it has to provide fair value. But why do we now have what we call fair value gap? The reason why we have fair value gap is simply because when price push and take out this high, which when price seek liquidity, only buyers are involved and there's no fair chance for sellers to get involved as well. So what do? We simply wait for price. When this happens, so price will have to come back to do what? To seek to provide fair value. Now when price was going up after taking out of this swing high, what did it do? Price left what? Left a fair value gap here. This is why we call it fair value gap. Now of course I will show you exactly how we can trade this. Okay, don't worry, just follow me. I'm just trying to give you a logic, because most times when you mix your trading with logic and objectivity, you tend to get maximum results. All right, so this is why some people say, they say use fundamentals and the like, right? So let's see this as a break of structure. For example, when this break of structure happened, what are we seeing on here? We see that sellers are involved. Sellers broke structure and they did what? They sought liquidity, and in them seeking liquidity, they left what? A fair value gap. So which means that there's no fair pricing. So in order for there to be a continuation of price to the downside, there has to be a fair price. So in order for us to get a fair price, now markets will give buyers opportunity to take their buys. So once they take the buys, for example, just like in this scenario, all right, price comes and filling that fair value gap. This is what we call this is what we say when it will say there's now a fair value. So of course immediately this fair value gap have been touched, it is no longer valid. You don't use it in the future. For example, look at that, you don't use it in the future, okay, but rather we now know that okay, this becomes an area of liquidity price wants to seek. So when that happened, what was the next trend? Price touched it and pushed down, and while pushing down, what did price do? Seeking liquidity. Right, now when price push down like this seeking liquidity, is there a fair value here? No. there is no fair value in price. And what do we have? We have a level here, this fair value gap that price left. So this becomes what? An area that we could potentially target. So this time around, we are not trading off of this fair value gap, but we are using it as a target. Do you know why? Because when this swing point was created, there is no fair chance for buyers to get involved. So how can they get a fair chance? And this way we'll now be having fair value gaps in prices to the downside. So what exactly happened? Price pushed down, took out short liquidity, and the next thing we're expecting is what? We're expecting price to do what? To seek liquidity again, or to provide fair value. Right, so in providing fair value, price will have to go and move towards that fair value gap. Now this is getting interesting. There's a way we can confirm if a fair value gap will hold or not. Now flow with me, I'm going to show you somewhere in this particular video. Remember why price was pushing up? Price was reacting from where? Price was reacting from this breaker. Right, of course it didn't touch it, but probably another breaker would have touched it, right? And that broker would have touched it. So price reacting from this breaker, and we could as well say price reacted from this SNR support level. And when this happened, there was a break of structure from this area. So this was where we have the break, and you see how these things are now coming together. So we had a break here, and of course at the same time we had what? A fair value gap being left behind. So because of that, we could expect some reaction around that particular level. Now is it 100% that okay, price we have to react from there? Of course it's not 100%, but 80 to 90% of the time it would. Why? Because price need both sellers and buyers to get involved in the market. Now remember why price was pushing down. Price sought liquidity where? Internal liquidity right here. And in the process of doing that, what did price leave behind? Fair value gap. You see how these things are becoming more clearer to you. Fair value gap, and what happened? Immediately price touched this zone, what? Price what? Have provided fair value here. So the next thing is to what? Seek liquidity. So if price is here, where is our next point of liquidity? Of course it's going to be this high. No, it is not this high. It's going to be this fair value gap. Then we can now start talking about this high, because price withdrawn to the nearest and closest draw on liquidity. This is why ICT call it draw on liquidity. Why? Because this is what is drawing price at the moment. Okay, so let me show you one more example, then I might show you something more practical. Now let me show you one more example. Remember we also have another level. Okay, let's use something that you could relate with. All right, so we have a break of structure. So the first thing you could say, okay, I always want to wait for my break of structure. Why? Because it shows me a potential area that price wants to go to. So once that is done, the next thing, once we have the break of structure, for example, we have a break of structure here, right? So we say, okay, now that we have a break of structure, where is the next possible draw on liquidity price wants to go to? Is it seeking liquidity, or does it want to provide fair value? In this scenario, if we have this break, what do price wants to do? Price will want to what? Let's call this so that you can follow along. Now if we see something like this, what comes to your mind first? A retracement, or a pullback, or a total reversal, is it not? Yes, but we are not interested whether price want to reverse like this. No, we are not interested whether price want to push up and go to the moon. No, all we are interested in, where is the next possible draw on liquidity? Now this is where fair value gap comes in as well. So now that we know this, price sought liquidity by taking this high, even took this previous 2 days high. So what's the next thing? Price wants to provide fair value. So if price decides to provide fair value, where is the possible place price wants to provide fair value? Here. Why? Because there is a fair value gap. So because there is a gap, there has to be a filling of that fair value. All right, so when that happens, we want to see price come here and we look for our buy opportunity here. All right, so that's exactly what happened in this particular scenario. Now let me show you one way that you could know, like I promised, that a fair value gap will work or not. Now if we come to the 1 hour, this 4 hours fair value gap, you can use the same time frame. The same time frame is stronger. All right, the same time frame is stronger. However, for you to get early entry using the lower a time frame lower could also be possible. Now what do you see? You hear people say that once price trades into a fair value gap, we're not interested in that zone, right? No, that is not so accurate. The reason is simply because of what I just said, that price will seek liquidity and will provide fair value. So in this case, when we have two candle closures that did not, like, see the first candle for example and the second candle sweeps it, then we now know that this zone might likely hold. And what happened in this scenario? It held. Now you could say, okay, but price did not come and take this high. This is why I said it might not be 100% as it were, but the same logic that pushed price to this high. And if you come to the 4 hour time frame, you will notice that it is the same logic. First two candles that tapped into it did not close below or did not close into it, so therefore that's a likelihood that is going to hold. So what do? Go to a lower time frame and look for potential buy setups. Understanding this about fair value gap could change the way you look at the market and help you to frame your draw on liquidity. I know some of you have been struggling about trading, therefore I'm willing to help you.
Let me tell you a quick story. A few years ago, there was this trader, hungry, determined, but constantly stuck in the same painful cycle. Every win was followed by a bigger loss. Every new strategy brought hope and, of course, then frustration. He would stay up late watching charts, studying setups, replaying his mistakes in his mind, and he knew he was meant to win, but something was missing: guidance, structure, and a proven path. Then one day, he made a decision. He invested in mentorship. Not another signal group, not another free YouTube strategy, but rather real mentorship. And that decision changed everything. Because mentorship doesn't just teach you trades, it transforms how you think, how you approach the market, how you grow wealth through discipline and mastery. And the most important part is that you will not be doing it on your own. You will be shown how to do it step by step. So that particular trader, he found clarity, confidence, and consistency. And since then, hundreds more have walked that same path. This is where the Komepips mentorship comes in. I want to hand over to you a system that you can use to improve your trading forever. In case you have not made it in 2025, in case 2025 have been difficult for you, I want to assure you that the next 2 months, if you give me the next 2 months, I could literally change your trading game forever. I can literally change how you see the market. So this isn't just another course. It's an end of year acceleration program designed for traders who are tired of guessing and ready to become profitable before the year 2026. Komepips mentorship might be what you want to consider, all right, because this is where we'll teach you. I will literally teach you everything that I know about trading, and of course I'll hold you by the hands and ensure you become profitable. Not just that, there is a program that we are currently running, that I am currently running, and this program is starting this particular week, is starting this week, and it is called a double honor trading program. The purpose is to ensure that struggling traders receive clarity in their system, and not just that, they begin to receive, they get an accurate strategy, they get a systematic, which I call standard of operation. So you get to learn my standard of operation on how you can learn and how you can increase and improve your trading strategy. Now, in case you really want to join, now this is for exclusive for my community alone. Now I'm going to allow just 12 people to join the mentorship, just paying $50 each. The normal price supposed to be around $200, $500 and $250. If you go to my website, you'll find it there. But for the first 12 people, I'm going to give you a whooping 90% off promotion, right? So all you need to do is to send me DHTP, send it to me on my Telegram channel, and just check the video description and get access. And of course, you are going to get access into the Komepips Academy. Remember, just 12 people, right? And we are done.